Howdy, folks. Rob Hannes here for the Preparedness Podcast, the podcast that brings you the best in preparedness information. If you want to find us online, go to thepreparednesspodcast.com. You can also follow us on Twitter at Prepcast, on Facebook at Preparedness Podcast, and of course, you can always email me directly at rob@prepcast.info. Even though you might not be able to tell it from my rather tired voice, actually kind of excited about a bunch of things. Got a lot of cool stuff going on, both for the podcast and in my personal life. You know, last month, at the end of the month, we had that Prepper Expo that Tony Tanglis put on. That was pretty cool. Getting ready for the next Prepper Expo that's in Bakersfield coming up the first weekend of June. I'm going to be giving a talk on EMP. And you can find more information out about that one at the preparetoendure.com website. That's prepare with the number 2endure.com, and you'll find out all the information about that. Also pretty stoked that my Surviving EMP book is finally available in print, and I am putting the finishing touches on the preparedness capability checklist. Got that back from the editor this past weekend and been working hard on going over that and trying to make the final touches and approvals before I send it off to the printer. I just updated the Surviving EMP web page on the site. I noticed there was a couple links that weren't working. Why didn't you guys tell me? Anyways, that's updated. If you go to the website, you'll see the links. You'll see the cover image that's there. Also, I've got a sticky post that makes it easy to get to the page if you're interested. The book is now available on Kindle, PDF, and print. And quite honestly, the PDF and print versions are a direct result of you, the listener, emailing me and asking me if those editions will be available soon. So we went ahead and did that. So one of the things that I wanted to talk about in this podcast is the difference between paper gold and physical gold. There's been a lot of hubbub about that, and now that the panic has died down a little bit, I think it's important to take a look at this and make sure that you have a good understanding of the difference, because there is a difference, and there hasn't always seemed like there's a difference, because the spot price that is on the ticker, like Wall Street sets a spot price, and the price of physical gold has been nearly the same. Well, that's no longer the case, and still is not the case, even though it's kind of died out of the mainstream media and even the alternate media. We've now see a lot of articles that have moved on to other things. But this is a very important concept to understand, because when you decide to work on your economic preparedness, and your economic preparedness plan isn't just about gold and silver. It should be about having an emergency supply of cash on hand. It should be working up towards being able to pay several months of bills, mortgage or rent and all your bills from cash on hand. Not cash in the bank, but cash on hand. And at some point, you're going to look at all this cash, and hopefully you can, have piles and piles of it. And you're like, you know what? I don't really want to have all this cash. I don't need to have all this cash. And at some point, because I've learned how the economy works and how fiat money works, I don't really want to have all this cash, because the value of the cash can drop very rapidly. We've seen this before, but a lot of times when you try to explain this to people, they kind of get a glassy-eyed look, and they don't really get it, so to speak. And I understand, because it's not an easy concept to understand, especially if you're not 100% interested in it. But once you get it, once it clicks, then you suddenly realize, I don't really want to hold on to too much cash. I want to have enough cash on hand to be able to pay 1, 2, 3, maybe 6 months worth of bills. But after that, I want to have it in assets. But I want to have these be liquid assets that I can transfer back and forth from cash to asset, and then asset back to cash. And you may not be able to do it overnight, but you want to be able to do it rather quickly. So, for example, for those of you who have a 401k or another investment, you can take that asset and move it into cash, but you have to take certain steps, and a lot of times you take a financial hit or a penalty for taking your money out quickly. Another way of looking at this is if you were to buy, say, collector mugs, and you were able to sell those collector mugs pretty much whenever you wanted to for the current market price. You could take your cash, buy these mugs, and hold these mugs. Now, these mugs don't really lose their value all that much because they're always a mug, no matter what. They're always a mug. You can always use it as a mug. So at the very lowest level, it's still a utilitarian mug. But because it's a collector's mug, you can get more money for it, and it's a matter of finding a collector who's willing to pay the price that you want to sell it for, and turn that mug into cash, and then use that cash for whatever you need it for. And then when you have a cash surplus, you can go ahead and buy some more mugs and whatever. Well, it's the same concept with gold and silver. However, there's an issue in that too many people equate the paper gold to be equal or equivalent to real gold, or vice versa. They think that because they have a gold ETF, which is an electronically traded fund, I think I have that right, I may not, but basically what it is a digital paper note that says you own X amount of gold or gold shares in a mining company or something like that. It's not the same thing. If you dig, and more and more time goes on, you don't have to dig that far, you'll see that a lot of these shares are oversold. Just like money stored in a bank. If a bank has $1,000 in deposits, they have loaned that money out many, many times, so that if everybody were to go and collect their deposits, to withdraw those deposits, the bank wouldn't be able to do it because they only keep, 5 or 6%. So they may only have like $60 on hand. They can't give all the depositors their money back. Same thing with the gold ETFs. It's the exact same concept. It's pretty much a shell game. It really comes down to the value that you hold and how much that paper is worth. And when it comes to a point where the economy collapses or the dollar collapses or there's a run on the banks or whatever, that paper is worthless, much like fiat currency. At some point, fiat currency gets to a point where there is no value to it. However, if you had something that people wanted, let's say you had water filters, or you had beans and rice and wheat, or you had some service that people need, like the ability to make bread, people will still pay for that. That has value. They're willing to give up what little money they have or trade for those services or those items. That's what having real items about, and that's why having real gold and silver is far better than having paper stuff. However, it's very confusing because what's happening right now is people are trying to buy gold and silver, and they're saying, hey, the spot price is $23 for an ounce of silver. Why are you charging me $28 or $30 for an ounce of silver? Well, it's because what comes into play is real supply and demand. This is the same supply demand that we learned about in basic economic class, whether it was in high school or college. It's the whole guns and butter thing. It's the whole, I have plenty of kumquats, but nobody wants to buy kumquats, so I sell them for a penny. Or I have 10 bananas and 100 people that want bananas, so I'm charging $100 a banana. It's that very basic concepts. To help me explain this concept and how to keep this perspective in mind and kind of what's going on in the gold and silver market, I invited Jeff Bennett from FlyingEagleGold.com, who is a good friend of mine. I've known him for, I think, almost 20 years now. I invited him to come on and talk about this because he's dealing with this every day, and I thought he'd have some great perspective on it. And I'd like to play that interview for you right now. All right, Jeff, thanks for joining me on the podcast. What I wanted to talk about is what's been going on in the precious metals market, because there's a big discrepancy between spot price and real price right now, and it's causing some confusion, I think, because people are expecting to pay a certain price, and when they find out that it's not what they're expecting, it's causing some confusion.
Well, Rob, number one, thanks for having me back, and it's been a while. But the reality is that when we start talking about spot, specifically people who are new to this market, they've never bought gold and silver before, they've never bought platinum or copper rounds or anything of that nature. They come in here saying, well, I don't understand. Spot is $1,454 today. Why do I have to pay between $75 and $95 above spot to buy an ounce of gold? It's because it is a finished commodity. $1,454 is theoretically what gold is worth in the ground. It has yet to be mined. It's not been assayed, fabricated, refined into what we call a planchet or a disc, which eventually goes to a mint and gets stamped into a recognizable round or a coin. And that follows through with gold, with silver, with platinum, with rhodium, with any of the metals that fall into this particular category. The best analogy I can give you and your listeners, Rob, is something that we all use every day, and it's a loaf of bread. And you can walk into Costco, to go to Sam's Club, go to your local grocery store. Why is it one loaf of bread costs $1 a loaf? You can buy 2 loaves for $3 over here. And this particular brand, maybe Oro wheat, goes for between $4 and $5 a loaf. Why is that? Because each one has a maybe higher demand, the perception being they've got greater health advantages. The average loaf of bread has probably got less than 25 cents worth of ingredients in it.
Well,
so
sure.
Now we're looking at the same analogy. We've got $1,454 worth of theoretically ingredients in an ounce of gold. But it does have to get fabricated, and eventually goes off to a mint, whether it's the U.S., the Canadian mint, the Australian, the Austrian mints, whatever the case may be. They then have to stamp it, and they have to package it, and they're going to make a profit on the product. And maybe they bought gold at $1,200 an ounce. Maybe they paid $1,600 an ounce for it. Doesn't make any difference. This is where spot becomes the guide. But what is spot? Spot is what gold and silver sell for on Wall Street. In other words, paper contracts, electronic trading funds, or ETFs, futures and options contracts.
Yeah, isn't it like 3 months ahead? I seem to remember reading someplace that the spot
as a
price
general rule,
where they think it's going to be 3 months, and so that's why they're buying it, and that's how they're pricing it and stuff.
You're right, but that actually brings up another interesting point, because I'll get calls from not only my own clients or people that listen to my radio program, but I will get calls from listeners to your podcast that this is totally new. They understand the basic concept of why they need to have some precious metals in their kit, whatever the case may be. But first of all, that question comes up about, why can't I buy at spot? What are the premiums? How much do you charge over spot? You know what? I don't have a set percentage because the percentage that I'm charged does change on a continual basis. Here's what's interesting. I can be on the phone with one of your listeners, maybe Ryan, and Ryan will be sitting at his computer. I'll be sitting at mine. We can open up 8 to 10 different windows on our computer. And we can be looking at a wide range of different companies who happen to sell precious metals. Well, this company shows spot at this, but this guy's got this figure and it's different, and this guy over here. So with 10 different windows open, we could be looking at 7 to 8 different spots. Almost nobody ever quotes actual spot. They're quoting, this is what, as we're doing this discussion tonight, this is May. They might be quoting July or August futures. You get some other guy that's picking a figure because the supplier might make an extra 3 cents an ounce, so he's quoting October futures. Plus the fact that each one of these companies has programs that may update more often than other companies. So it's never locked in concrete until we call the actual supplier and lock it in. Once again, I'm a broker. I'm not a coin shop. I shop to get the best deals for our clients that we possibly can. Hopefully that answers that. But we have to take it further, because I know one of the things you wanted to talk about. Why is this massive disparity between what you brought up, spot gold versus the premium we have to pay? Once again, Rob, it comes down to supply and demand. Right now, because gold and silver over the last few months have been hammered so badly, we saw gold get very close to $1,300 in less than a week back in early April. Right now, it's back up at around 1454, 1460 in that era. But while Wall Street is selling off all these contracts, people are bailing out in their short positions within the contract element.
And do you know why that's happening? I mean, I've heard several things, but I haven't heard anything concrete.
Part of it's a fear factor that, oh my God, it's going to tank and I'm going to lose my assets, ASSETS. Some of it's because they found another area that their broker has suggested is going to be more volatile, therefore more profitable. Let's get rid of your silver. Let's move over here and let's get wheat futures or oil futures because, summer's coming up, so we know the price of oil is going to go up, etc. It's a constant gerrymandering. It's what I call churning, and I'm in the middle of a major campaign on my own program right now, discussing and educating my listeners as to what churning is. It's when a broker says, well, get rid of all your gold and I'll get you silver. Well, that sounds great. Silver historically is more profitable than gold. As we've shared in the past, you buy gold to hold. It's long-term savings account. You tend not to touch it. You're trying to provide for future generations of your own family, but it's there if you need it. 2012, early 13 were very interesting year and a half for me, because I had more clients liquidating metals during that time period than were buying. The reason for it, they bought it for a rainy day. For many people in America, that rainy day came. No jobs, no prospect for jobs, faced with losing their homes, maybe health issues, need a new engine for a 10-year-old car that they've got to replace. They had the metals to fall back on. But here's what happens. We've not seen any discernible increase on the premiums of gold. I don't care if you're talking British sovereigns, American Eagles, Maple Leafs, Austrian Philharmonics, Chinese pandas, although that's kind of an oddball market unto itself, because the Chinese so desperately will pay any price possible to buy their own product. It's almost like its own little collectible market within China. But you take all these various different gold coins that I tend to deal with, very, very minimal increases in the premiums, and yet the buying public is buying all the gold and silver they possibly can. Rob, you could call me you could win the lottery tonight. Maybe you won that $160 Powerball tonight. And you call me and say, Jeff, I want to dump $100 million of it into gold. I could get you $100 million worth of gold, and it would not make spot move one penny, because you didn't buy it on Wall Street and you didn't buy it on paper. You bought a physical product that's already been moved out into the marketplace, and all your purchases today would not move spot at all. Silver has been the real shocker. On May the 1st, several days leading up to May the 1st, there was a massive campaign on buy silver on May the 1st, buy silver on May the 1st. Dealers and brokers all around the country were jumping on that bandwagon, which was hilarious. There was little or no silver to be had in this country on May the 1st of 2013. And I have watched the premiums on silver skyrocket. The U.S. Mint has ceased production of Silver Eagles twice this year in 2013. And we're just now, as we're talking tonight, entering the 5th month of the year. Canadian Maple Leafs, they don't have enough silver to produce. The U.S. Mint lost 12% of its capabilities. Understand what the U.S. Mint, by law, the U.S. Mint must mint silver American Eagles with silver that was mined and fabricated and produced in this country. They cannot go to outside countries to resource their silver. When the U.S.
the reason they're stopping is not because, we're trying to prevent the public from buying silver, or we don't.
The public has bought it up in record numbers.
Well, they're running out. There's not enough silver production coming out of the American mines to keep up with the demand, right?
That's true.
Okay.
And then also, of course, we had the cave-in in Utah back in early April, which put another 12% hit on the silver market. That's going to be years before that mine is restored and back to full production. Here's what I've watched happen. If someone would have come to me in February, March of 2013 and said, Jeff, I want to buy a monster box of silver American Eagles. A monster box is a U.S. Mint sealed box of 500 ounces of newly minted silver bullion coins, the American Eagle. They would have paid, as a general rule, somewhere between $2.75 and maybe as high as $3.25 over spot. Now that's quite a bit of a range of 50 cents, but it depends on the moment to moment what the individual market is. That's why I give your listeners the range. Today, there are companies that are charging $6 to $8 above spot, and they're talking 6 to 8 week delivery at minimum. Possibly longer as this thing unfolds. Canadian Mint's having the same problem. Their production is not up to snuff. As of this date that we're talking, May the 1st, 2013, all of the major mints around the world cannot supply enough product. I go to website after website of major suppliers. Many of them are talking 4 to 6 weeks delivery. Some are talking as long as 12 to 14. Oh, but when you order it, you got to pay for it now. No cancellation. You're done. I've been fortunate over the years. I've got resources that many people don't have. It doesn't make me better. It just means after 20 years of doing this professionally and over a half a century of doing it personally, you develop relationships. And I can usually pull some things off that a lot of larger companies, chiefly those who advertise all over Fox News, may not be able to pull off. And I've watched, as of 2 weeks ago, I was still ordering. One of my suppliers has an office in Vienna, Austria, that's open from midnight California time till 7 in the morning when the Santa Monica office opens. I actually was placing orders at 12:30 at night. We're here in Arizona, of course, but this time of the year we're on Pacific time. I would call Vienna and I was placing orders. And all of a sudden, about 2 weeks ago, I got a hold of my broker over in Vienna, and he said, Jeff, we've been instructed to take no silver orders tonight. All silver orders are on hold until tomorrow morning when Santa Monica opens up. Well, Santa Monica opened up. They were a little wiggy. They took some orders, every one of which was filled within 4 days. Now, that's pretty darn neat. Not 6 to 8 weeks, not 12 to 14 weeks. But by a week ago this past Friday, which would have made it, somewhere around the 20th of April, I don't have a calendar open, all silver shipments stopped. They stopped taking orders because they had no clue when they were going to be able to deliver. Maple Leaf premiums were up. Eagles were up. The largest private independent wholesale operation in the country put a sign up on his website saying sold out, no orders being taken at this time. That's how most companies are going into this. They can't take somebody's money and sit on it for months. That winds up in the court of law, no matter what the agreement was between the two parties. I've seen this happen before. I did get an email while I was on the air this past Monday, the 30th of April. And while I was on the air, an email came in from one of my suppliers informing me that they had acquired a sizable hoard, as it were, of 2013 minted Mexican Libertads, one of my personal favorite coins, chiefly because we live in the Southwest, and with the populace that we have, I enjoy having some of those. I was shocked at where the premiums are. Nobody's basically got legitimate 1 ounce silver rounds. If your listeners want to buy 1 ounce silver rounds, these are 1 ounce silver pieces that are 0.999 fine. Generally, I only recommend one of two products because they're recognized all over the world. An awful lot of new companies have been cropping up over the last year saying, we're a private mint. Look at our pretty coins. Buy them. Right this minute, I've got no way to assess what it is they're selling. What's their delivery time? One company says, yeah, we got the best prices, but you wait 4 months to get your order because they won't go and strike coins until they get a large enough number of orders. Listeners have got to watch out and be very careful for this.
it's several factors going on here that anybody who's trying to buy gold or silver needs to keep in mind. And of course, we've talked about how the spot isn't applicable really to the physical metals because it's a Wall Street investment. It's an ETF. It's paper gold or paper silver. It comes down to supply and demand. Doesn't matter how much money you have. Doesn't matter how much willing you are to spend over spot. If it's not available, you can't get it. And this is why that if you're, as far as a prepper, if you're looking at trying to get your precious metals, if you're trying to build up that part of your economic preparedness plan, then you need to be able to move when the market is right. You want to buy low and hold. You don't want to wait until the market is going high. You don't want to panic when the price starts to come down, because we've seen this several times now where the price is dropping rapidly and people start to freak out. Oh my gosh, I spent $1,200 and now it's $800, and that causes people to sell. And I don't know if that's the impetus for this crash.
Actually, that was a part of it, and it backfired. Because what they found, just as you and I have seen at these gun shows, look what's happened to ammo prices. It's skyrocketed. It's supply and demand. I had a guy told me the other day what he saw at the price of the Crossroads of the West gun show for a brick of 22s 2 weeks ago. It was shocking. He remembers when you could buy that stuff for $14 for a brick, and now it was an outrageous price that I don't even recall what it was. And
I heard it was like, I think, $60 or $80 for
something just outrageous. Like, these are 22 long rifles.
Yeah, and not even like the premium stuff. It's not like your CCI mini mags or something like this. Was like your typical bulk grade.
Yep.
22. I mean, it shot well, but it wasn't premium, and it was amazing how much it's
plinking
going for
material.
now.
That's all it is,
Yeah.
And these kind of things are very, very difficult. We're seeing the same things in the silver and gold market. They expected a massive sell-off. And the interesting thing is as I shared with you earlier, I had a lot of people selling off last year because of economic need. But when the market started going through these gyrations they've gone through for the last couple of months, I've been shocked. Nobody's selling. They're trying desperately to buy. And this is where the rub comes in. Because, you talk about let's not panic and sell out when it's on a down. I also say don't panic and buy when it's on the way up, when it's this erratic.
True.
My goal has always said, look, buy gold and silver and don't ever pay any attention to the cost of it, what it costs you to buy it. Just continue to buy it steadily. Buy a 10th ounce gold eagle. Buy a roll of American silver eagles or a roll of rounds or whatever as you can afford to do so. Junk silver when it's available. Junk silver has just, the old 90% dimes, quarters, and half dollars has become outrageous what they're charging for it. I've told most of my clients that, look, even if it were available right now, I try to talk my clients out of the panic buy, and here's why. When you normally would spend between $2.75 and $2.75 and $3.25 over spot to buy a full box of eagles, why do you want to pay $6, $7, $8 and more to buy the same product today? Because the moment that product becomes readily available again, that premium is going to be gone with the wind. Which means silver's got to go up $5 or $6 or $7 just for you to break even. And so we try to do some cherry pick buying. But even when the guy came to me and said, look, I've got Mexican Libertads, I was ecstatic. And then I took a look at the premium and I about gagged. I said, that's nuts. Yeah. That's more of a premium at wholesale than what I used to retail the things for.
Right. Well, this is the thing that preppers need to get accustomed to is don't buy when it's popular. Don't buy when it's on everybody's mind. Right now, gold and probably silver is in the forefront of everybody's mind, so it's volatile. It's got huge swings. It may go really high. It may go really low. Whatever it's causing the panic, that's not the time to be looking at buying. You should have been looking before it was on the forefront of everybody's mind. And this goes along with a lot of things. So, for example, when Fukushima went up, everybody wanted to get the potassium iodide and potassium iodate, and companies were running out. That's not the time to be trying to increase your nuclear preparedness. Same thing with food storage and water filters and gold and silver and ammo and pandemic supplies. If it's on the forefront, I mean, if it's making nightly news stories, it's not the time to be looking into it. You should have been doing first. I mean, you should have done it before. So whatever is not currently available that's still important, that's where Proper should be looking at, because you want to be ahead of the curve. And it really depends. I mean, you can do panic buying, I suppose, if you want to. I know a lot of people who do it that way, but I don't think that's a smart way of doing it.
No, not at all. Not at all. Look, you and I met some 18 years ago, and in a roundabout way, I was probably more involved with the prepper mentality than I am today, because I've spent so much time doing that. I've acquired much food, and I continue to rotate things, and I update first aid stuff and make sure I've got meds and junk like that that's needed. Of course, my family's expanded no differently than yours has, and I've got my 2 children are grown. I've now got 3 granddaughters, so I'm continually having to do things for them to ensure that things are ready if and when they become necessary. But back in the day when we first met, I was, obviously selling long-term food storage programs and freeze-dried foods and ready-to-eat meals and things like that. Back in those days, I actually dealt with, if you recall, gas masks and filters and a wide range of things. Don't do that anymore. I can't keep my fingers in every single pot that's out there. But, at about that time, maybe a couple of years before we met, I was introduced to an interesting client. And unfortunately, the company I originally worked for would not service this guy's needs. But I was prepared to do it. And for nearly 20 years now, and I've shared this story on the short cast that I've done with you and the podcast we recorded in the past. This guy came to me many years ago and began buying 1 gold coin a month. And he never failed. 1 month he failed. And the following month, maybe because his money came in late, he bought 2 coins the next month. So 20 years of this nearly, and picking up 12 little gold coins. Not ounces. These are quarter-ounce pieces, fifth-ounce pieces, whatever he could afford within his pocketbook range. 20 years of doing this. Take 20 times 12, and what does that give you? 240 gold coins? That's not a bad bunch of holdings to sit on. A lot of your listeners are younger. Maybe they're in their 20s, their 30s, their 40s. You've got time to continue to build. Do the same thing. I've got one client now that buys 2 rolls of silver from me every single month. Right now, obviously, we've got a problem. We can't deliver. Those are the kind of suggestions I make to people. You don't know what the future is going to bring. Start preparing for whatever. It comes back to the old Boy Scout motto. Be prepared. Prepared for what? Be prepared for anything. That's simple to me.
Yep.
Very, very simple.
Yeah, and that's what I wanted to kind of hit with you is, hey, what's going on? Why the difference in prices? And my biggest point I wanted to get across was that, you shouldn't be panic buying, because this is what happens. You run into these big swings, whether they're going up or going down. And if you panic buy, like you said, you could be paying so much over spot that the actual price, once the market calms down, has to move that additional amount in order for you to break even. Because when you go to sell it, there's also a cost in that. And so you want to make sure that you're not writing those highs and lows, because it's very difficult to make that work.
Let me share this quickly. I know we're reaching the end of our time. I want to share with your listeners that if number one, be extremely wary of places like eBay. I'm not knocking eBay, but I'm talking about the vendors. Look, we've got silver right now at about $23.50 an ounce tonight. There are people on eBay charging for 1 ounce silver coins between $33 and $35 each, where the futures prices, which is really what spot is is at about 23 bucks. You've got to be very, very careful because, once again, so many of these vendors are now completely out of stock anyway. The physical gold market is sending different signals than the paper market is. That's pretty much what we've been talking about. By the way, the U.S. Mint announced about a week and a half ago that they have ceased production of the 1/10 ounce American Gold Eagles. Expect the premiums to start skyrocketing on those. But I do share this with the audience, much as we saw in Cyprus a month or so ago when the banks closed for nearly a week. And when they finally reopened, they discovered that the bank was now in effect taking possession of their deposits to aid the government in their massive economic bailout needs. So if you had $100,000 in the bank, all of a sudden your bank is holding on to 40% of that to take care of the government's needs. Oh, but that could never happen here in America. Well, things like that have happened here in America before. The long-term fundamental reasons to hold gold and silver are undeniably still with each and every one of us. Central banks all over the world are acting in concert in what we call currency wars, or the race to debase. As they print more money, this paper stuff that we spend, the purchasing power of each one of those, in this case we'll call it dollars, declines. So they are caught between the rock of having to keep interest rates low to support the government's huge deficits and the hard place of the long-term effect of diluting their currency. You see, that's the reason for owning gold and silver. Don't pay any attention to what its daily value is based on spot. Keep in mind what that gold and silver can buy for you when you need it, whether it's labor or a product or food or fuel.
One of the hardest things sometimes to get people to understand that concept is it doesn't matter at what price you're buying your gold and silver because it's tied directly to the inflation or deflation of the dollar. And I don't know if you remember, a long time ago, I actually charted out the inflation and this price of gold and stuff, and I actually said, I'm like, wait a minute, how do I make money?
Yeah, I do. That was about 12 years ago.
Yeah,
you did that. I remember.
And so for the listeners, what I did is I took a spreadsheet and I charted the inflation rate, and then I charted in the next row basically the spot price of gold averaged for a year. And at the end of this, like from 1975 or 8 or something like that to 1990 something or 2000, whatever the stats go, what I found was that gold went up almost directly in correlation with inflation. And I'm like, wait a minute, if I take $1,000 of gold, 20 years later, I get more cash, but basically the inflation has eroded that value. And I told Jeff, I'm like, how am I making money here? And you told me you're not making money. That's not the point. The point is to preserve how much you can buy. So whatever you could buy with 1,000, 20 years from now, when you go to turning your gold, however much money you get for it, it's probably going to be right around the same amount of stuff that you could buy when you first bought the gold, and that's all it's there for. And it was such an eye opener to do that. I came across that spreadsheet the other day. I should probably try to find it and see if I can post it.
Well, it's there's a combination of things that take place here, and I've done many analogies over the year. We've gone back and used the cost of a 1972 Chevrolet Impala, 2-door coupe, white vinyl roof, automatic power steering, power brakes, air conditioning, AM/FM radio was the big thing that year, and metallic paint and some white wall tires. And you could drive that thing out the door for $2,700. Well, why is that same car today worth $27,000 if it's in light condition, or $60,000? It's worth whatever someone's willing to pay for it. The thing that's interesting is the car really isn't worth one dime more than it was when it was brand new, other than through a collector's eyes. But it's the fact that the dollar has declined in value so greatly. I know that's a tough concept, Rob, because a guy's still got a dollar bill in his wallet, or a 5 or a 10 or a 50 or a 100, and it still says 100 on it, and it still spends. Well, let's talk to the wives for just a minute. The simplicity of $70 I talked to a client of mine last week in Chicago, and he said, my wife and I are shocked. We used to have this big Chevrolet Caprice. That was that big Chevrolet with a huge trunk. And for $70, you could fill the entire trunk of that car with groceries. Now, today's $70, you walk out of the store with 2 bags of groceries.
Yep.
Not enough to fill the trunk.
Yeah,
maybe a couple saddlebags on your Harley. That's about it.
That's about it. Yep. Well, the inflation happens so gradual. And I posted an article from one of the places that I get news, and they were saying, the Cyprus confiscation that happened could never happen here, right? Well, it's already happened because of the yearly inflation over so many decades has already stolen so much of the value of people's savings or the purchasing power for every dollar that they earn. It's already happened in many cases, in many ways. So, Jeff, I want to before we drop off here, I want to have you tell us how people can get in touch with you, and tell us where they can go to listen to your radio program.
A couple different things. Actually, the easiest way to handle is let's direct them first to the website, flyingeaglegold.com. And that was named because years ago we had Flying Eagle cents. On the back of some of our gold coins, we had eagles in flight, etc. flyingeaglegold.com. There is contact information toward the upper right-hand sector. It's got our address on it, which, by the way, you'll find it under the listing of Kettle Moraine. Kettle Moraine Limited is our corporate overbearing. That's, in effect, who you'll be talking with, which is usually me. We have a toll-free number we can be contacted at now for ordering. It's not a chit-chat line, but it is an order line. We do invite you to use it. I may have to call you back if I'm on with somebody else. That phone number is 855-BUY-SILVER, 855-289-7587. That's 855-289-7587. You can drop us an email, info, I-N-F-O, at flyingeaglegold.com. Also, as far as tuning into my daily programs, scroll down just a little bit. You'll see a banner on the right-hand side of the website that says Jazz, Jazz, Jazz. The name of our daily program is Life, Liberty, and all that jazz. We discuss economics, health, politics, a wide range of things. And we certainly invite you to tune in 2 hours every day, Monday through Friday. 2 more quick things. If you scroll down to the area that says pages, there is a section called Why Gold. I invite you to click on that link. And when you do so, it will take you to a page where we have 6 or 7 different articles posted. Some of them go back to 1966. One is a marvelous historic story about Jacques Dupre, who passed away and left his only heir the power of intergenerational wealth provision. And it's a marvelous story about gold. It's a true story. So we invite you to take a look at some of those things. People ask me, what are the reasons for owning gold? Those stories, will share a lot of that with you. One final reference, currently on the front page of flyingeaglegold.com, if you scroll down just about halfway, there is an article entitled The Gold Takedown, Another Glimpse into the Central Banking Matrix. If you read that article, you will have a better understanding of what's going on in the markets, why the manipulation, why it's all being driven down at a time when all the fundamentals indicate it should be going up. So who's manipulating? The gentleman does a very good job of explaining, probably one of the best pieces I've ever been privileged to share. So flyingeaglegold.com, you'll always find me through that site.
Great. Jeff, I want to thank you for joining me on the podcast and helping clear up a little bit of what's going on in the gold and silver market.
Glad to be here, and glad. Hope it is going to clear up some, answer some questions for some folks. That's why we're here, and hopefully we'll do this again as needed for your audience.
Yeah, and folks, if you have any questions, go ahead and contact Jeff, or you can contact me, and we'll do what we can to answer your questions. Hopefully that answered some of the questions about what's going on with gold and silver and why the difference in spot price and physical metal price, and some insight that'll help you with your economic preparedness planning. Until next time, enjoy life, and be safe.